Good morning and welcome to another episode of Crypto Today. We've got a packed show for you today with major developments in the world of cryptocurrency regulation and institutional investment. Joining me, as always, is my co-host. Let's dive right in.
That's right. We've got a big story coming out of India where the Directorate of Enforcement has seized nearly $190 million in cryptocurrency as part of its investigation into the BitConnect fraud case. This is a significant development, and it's another example of governments around the world cracking down on crypto scams.
BitConnect, for those who may not be familiar, was a notorious Ponzi scheme that collapsed back in 2018. The founder, Satish Kumbhani, is wanted in both India and the US, and it's estimated that investors lost hundreds of millions of dollars in the scheme. This seizure is a big deal, not just because of the amount of money involved, but also because it shows that governments are getting more sophisticated in their ability to track and recover cryptocurrency assets.
Absolutely. And it's not just governments that are getting more sophisticated. We're also seeing institutional investors getting more comfortable with cryptocurrency and decentralized finance. Case in point, Brevan Howard Digital has just deployed $20 million on Ethereum-based Kinto as part of its institutional DeFi push. This is a big vote of confidence in the Kinto platform, and it's another example of how institutional investors are starting to take DeFi seriously.
That's right. Kinto is an on-chain financial platform that rewards asset deposits with token emissions. This investment by Brevan Howard Digital will enable the firm to participate in Kinto's mining program, which is a key part of the platform's value proposition. We'll be diving deeper into the world of DeFi later in the show, but this investment is definitely a positive sign for the sector.
And it's interesting to note that this investment is coming from Brevan Howard Digital's Abu Dhabi branch. We've been talking a lot about the growth of crypto hubs around the world, and the UAE is definitely emerging as a major player in this space. We'll be exploring this trend in more detail later in the show.
So it's shaping up to be a big day for crypto news. We've got regulatory developments, institutional investment, and the growth of crypto hubs around the world. We'll be diving deeper into all of these stories and more throughout the show. Stay tuned.
Building on what we discussed earlier about market volatility, there's another story that caught my eye. Solana exchange Jupiter is facing some heat over the collapse of the meme coin LIBRA.
Ah, yes, Libra's meteoric rise and fall has all the makings of a classic crypto drama. Argentine President Javier Milei's endorsement sent the coin soaring, only for it to plummet by over 90% when insiders reportedly cashed out millions in liquidity.
Exactly, and now Jupiter is denying any involvement in Libra's collapse. They claim to have always prioritized transparency and fairness in their dealings.
But the question remains, did insiders manipulate the market to make a quick profit? The fact that Libra's market cap tanked so quickly raises suspicions of foul play.
Absolutely, and it's not the first time we've seen this kind of thing happen in the crypto space. It's a reminder that investors need to be cautious and do their due diligence before jumping into any new project.
Speaking of caution, it's interesting to note that US-listed Bitcoin miners are growing their share of the network hashrate. According to a report by Bernstein, these companies now account for around 29% of the network's hashrate, up from 20% a year ago.
That's a significant increase. What do you think is driving this growth? Are US-listed miners simply getting better at what they do, or is there something more at play?
Well, it's likely a combination of factors. US-listed miners have access to more capital and resources, which allows them to invest in better equipment and infrastructure. Additionally, the regulatory environment in the US is relatively stable, which can give investors more confidence in these companies.
That's a good point. And it's worth noting that this growth comes at a time when the global hash rate is becoming increasingly decentralized. It's not just Chinese miners dominating the space anymore.
Exactly. The rise of US-listed miners is a positive development for the Bitcoin network as a whole. It adds more diversity and resilience to the system, making it harder for any one entity to manipulate the network.
Agreed. And it's a reminder that despite the ups and downs of the crypto market, there are still plenty of positive developments happening behind the scenes.
Absolutely. We'll continue to keep an eye on these stories and bring you the latest updates as more information becomes available.
We are just discussing the ongoing market volatility and how some experts are warning of a potential downturn. Now, it seems like those warnings are starting to materialize. with Solana and XRP leading the charge in a major crypto drop.
That's right. With the U.S. markets closed for President's Day, it seems like some investors are taking the opportunity to take profits and reassess their positions. We're seeing a bit of a sell-off across the board, but Solana and XRP are definitely the biggest losers so far.
Yeah, and it's not just the major cryptocurrencies that are feeling the heat. Some mid-cap tokens like Jupiter's Jupe are also taking a hit, with losses of up to 9% in some cases. It's clear that investors are getting a bit nervous and are looking for new catalysts before making their next move.
Speaking of nervous investors, have you seen what's happening in Argentina? The country's stock market took a sharp nosedive on Monday morning after President Milei was hit with fraud charges related to his promotion of a meme coin.
Yeah, I saw that. The S&P Merval index dropped by over 5% when markets opened in Buenos Aires, although it has rebounded slightly since then. Still, it's trading 3% lower than when it closed on Friday, which is a pretty significant drop.
It's interesting to see how this is playing out. I mean, we've talked about the risks of investing in meme coins and other speculative assets, but this is a whole different level. When a country's president is accused of fraud related to a cryptocurrency, it's bound to have a major impact on the markets.
Absolutely. And it's not just the crypto markets that are affected. The broader stock market is also taking a hit, which just goes to show how interconnected everything is. It's a reminder that investors need to be careful and do their research before making any investment decisions.
Building on what we discussed earlier, this is also a great example of how regulatory uncertainty can impact the markets. If investors don't have confidence in the regulatory environment, they're going to be less likely to invest, which can have a ripple effect throughout the entire ecosystem.
Yeah, it's a complex issue, but one thing is clear. Investors need to be cautious and stay informed in order to navigate these choppy waters. We'll continue to monitor the situation and bring you updates as more information becomes available.
As we wrap up today's show, I want to circle back to the story about Metaplanet's latest Bitcoin purchase. Spending another $26 million to bring their holdings above 2,000 BTC is a significant move, especially considering the current market conditions.
That's right. And what's interesting here is the average price they paid per Bitcoin, 14.8 million yen, which is roughly $96,000. This suggests that Metaplanet is still bullish on Bitcoin's long-term potential, even with the recent price fluctuations.
Exactly. And this purchase brings their total holdings to over 2,000 BTC, which is a substantial investment. It's clear that Metaplanet is committed to accumulating Bitcoin, and their confidence in the asset could be a positive sign for the market.
Now, let's contrast this with the LIBRA token scandal we discussed earlier. The fact that on-chain evidence has linked the token to the issuers of the Millennium meme coin raises serious red flags. It's another example of the lack of transparency and accountability in some areas of the crypto space.
And it's even more concerning when you consider the alleged involvement of Argentine President Javier Milei. The fact that he's denied any advanced knowledge of the project, but others involved have come forward with damning information, suggests that there's more to this story than meets the eye.
Absolutely. This scandal highlights the need for greater regulation and oversight in the crypto industry. It's not just about protecting investors, but also about maintaining the integrity of the market as a whole.
So what are the key takeaways from today's stories? For one, Metaplanet's continued investment in Bitcoin suggests that there's still confidence in the asset's long-term potential. On the other hand, the LIBRA token scandal serves as a reminder of the risks and uncertainties that exist in the crypto space.
That's right. And looking ahead, it's clear that the crypto market will continue to face challenges and controversies. However, it's also an opportunity for growth and innovation. As we move forward, it's essential to stay informed, stay vigilant, and always prioritize caution when navigating the crypto landscape.
Well, that's all for today's show. Thanks for joining us on this journey through the world of crypto news. We'll be back tomorrow with more updates, analysis, and insights. Until then, stay crypto savvy.
And don't forget to follow us on social media for the latest news and updates. We'll catch you all on the flip side.